Hello, everybody. A warm welcome from the Minder de Gunzburg Center of European Studies at Harvard. This is a webinar in our European Economic Policy Forum series, a series which Dante Rossini from the Business School and I organize. We are very pleased to have today Marco Buti, who is head of staff of Economics Commissioner Gentiloni at the EU Commission, and has been, of course, for a long time. That's why most of us know him from, Director General of ECFIN, one of the very important departments for economic and societal developments in Europe. Marco has written a fascinating and highly readable book, which somehow, as he calls it, explains his journey in Europe, a journey between two crises, the crisis of 2008, great financial crisis, and the pandemic beginning in 2020. Marcus' journey, of course, has began much earlier. He is at Brussels since 1987, and he was involved in a number of very important reports, which actually launched Europe on its trajectory. When he came in as a young economist, he was supposed to think about the costs of non-Europe, the famous Cecchini report. Later on, he was involved with the One Market, One Money report, which basically made the case that Europe can only work properly, the single market, the deeply integrated European economies and societies, if they share a common currency. And he also was working on the Sapir report. And if I recall it correctly, one of our discussants was somehow involved in that at the time. He's smiling, so I'm not completely wrong. Marco will present the core of the arguments of his recent book, Inside Man, and he titles it Two Crises, Journey Between Two Crises. Of course, there have been a couple of crises in between, and Europe somehow seems to need those crises. I'm talking of plural, in order to get its institutional structure run more appropriately. So there was first the almost implosion of the Eurozone after the Eurozone debt crisis, and it led to institutional innovations. It led to monetary policy innovations, whatever it takes within the mandate, what the ECB introduced, but also it pushed towards a banking union, which is in some of its pillars working properly, and others still work in progress. So Marco is rendering us his story from his Brussels perch, and he is describing this institutional learning process. But this is not a book talk, proper book talk. We would like to critically discuss Marco's views from Brussels. So after Marco's introductory remarks, we have two outstanding discussants. The first is Gertrude Tumpel-Gugerell, who used to be at the European Central Bank as a member of the board between 2003 and 2011. And she was in charge of payments and markets for a while. So she has very much a first-hand experience. And prior to that, she was at the Österreichische Nationalbank, the Austrian National Bank, and working also in lots of international fora. Inter alia, she was involved in IMF work. Then we have as another discussant, so Gertie is supposed to take a monetary view, monetary policy, financial policy view. Then we have as the second discussant our own Jeffrey Frieden, who is professor of government and also the dean of the Department of Governments here at Harvard. Jeffrey is known for many highly readable books. Last one I recall, Currency Politics, but of course also great books like Global Capitalism. He has been working over a long period of time, somehow as an embedded economist on European issue, and most recently about why it has become such a tough sell for Europeans. What Marco has been doing. Marco, was that a fair way to hand over to you?
Absolutely. Thank you very much, Hans Helmut. Pleased to be here. Actually, not very pleased.
Come on.
No, not very pleased, because I used to, over the past several years, I established a little tradition to come over around the Halloween time, and you were so kind to organize a seminar, and I think I've been there 5 or 6 times. So after the interruption last year, I was really hoping to be there in person.
We tried our best, Marco.
This year,
but you have to, Marco, you have to vaccinate.
Mm-hmm. So anyway, so so I'm pleased, but only half, let's say. And next time, next year, I really hope to be there in person. And let me thank you, the Center for European Studies, for the great work, and for you for always the stimulus and that you have given us and me personally. And I would like to thank also Gertrude and Jeff for. Then I'll see if I thank them after their discussion, but that we will see. Now, I think when you publish a book, maybe the one good thing to do is to start with the cover. Okay, maybe you see the cover here. Apart from the title and the subtitle, what you see here is, and I have to say, I've chosen the cover myself. So sometimes the publisher imposes something, but this time was not the case. So what you can see here is a compass, and over that, the fragile euro boat, hanging on a, precarious equilibrium over the compass. Now, this captures very well, and I don't know if Gertrude agrees with that, what we felt during, or what I felt also myself, during the financial crisis, the global financial crisis. The feeling was that we were proceeding without a compass, or at least without an agreed compass. The question here that we have today is whether, after the journey through these various crises, and Hans Helmut, I agree with you, there were probably more than two big ones, and sub crisis within those, whether now we have a better compass, or we have an agreed compass. So this is a question mark. Is something I think is worth discussing. The compass, is round, has a needle, and in Europe, everything is more complicated. So I'm not going to look for a compass with a needle. I will present you with a trilemma. Actually, if I had to redub the subtitle of the book, one may choose something like the maiotic power of triangles, because if you look through the books, I think I have, if I counted well, I have 8 trilemmas, 2 compatible trinities, and another couple of triangles, including one that I'm going to use only verbally later on. So I have plenty of choices on trilemmas. So I have chosen one. So every time I present the book, I choose a different one. So this time around, I have chosen the one that I'm going to share with you, and I hope you can see it. Let me go. Okay. Okay, I hope you can see it. Right? So the green one. So this trilemma here is very much inspired by Danny Roderick globalization trilemma, and it has applied to Europe. Okay, economists, or at least economists like me, macroeconomists, like trilemmas, and I mean the most classic one is, as we all know, the one on Mandel-Fleming, Padua-Schioppa, which has you basically you can combine two of the three corners, but not the three at the same time. And Mandel was the one that you cannot have a free capital mobility, fixed exchange rates, and independent monetary policies, and precisely sacrificing the last one, the last element, what was led to the creation of economic and monetary union, the Eurozone and the euro. Okay, we know that in economics, nothing is once and for all. So what you have is that even this classic trilemma of Mandel has been called into question. And for instance, I think there has been evidence, Helen, Ray, and others, which show that actually when you have an overall global financial cycle, you don't have a trilemma, but you are back to a dilemma, because you cannot have, even with floating exchange rates, you cannot have independent monetary policies. This to say that the trilemmas have been challenged, and this one here is, and there has been a lot of discussions following Roderick globalization trilemma, has been also very much called into question. But I think it helps me out very much to tell a story of European integration over the past 30 years, all in one triangle. So what does the trilemma say is that you cannot have deep political and economic integration, a primacy of national institutions, and democratic legitimacy. So this is essentially what Roderick explains for globalization, and apply here to the European integration. So how has the trilemma been solved over the past 30 years? And I think you have here A, B, and C, three ways of solving the trilemma. The first one is solution A, and goes back to the 1990s, and let's say the first benign years of EMU, so the first decade of EMU. So it was basically the single market, the creation of economic and monetary union. There we went for deep integration, economic certainly, monetary, economic, but also in retrospect we know deep political integration, and I think democratic legitimacy, taking decisions I think at the appropriate level. And that went in a sense solve the trilemma by moving away from a purely national view and taking decisions and making steps at the euro and euro area level. So this was what happened in the end of the 1980s, the project 1992. By the way, 30 years from the supposed completion of the single market next year. So we may have maybe some specific initiative on this next year, and also monetary integration EMU. Now, then came the global financial crisis, and within that, the sovereign debt crisis. And that what happened there, and I think Hans Helmut mentioned in the introduction, I think we went for deep integration also. I think what was noticeable at the time was the fiscal compact, the creation of the ESM, so the crisis management mechanism of the Eurozone, banking union, part of it. But what prevailed there was essentially the intergovernmental method, which gave the primacy of the European Council to the European Council, so the primacy on national institutions over the community method. So in terms of democratic legitimacy, there was a question mark there. So this was the intergovernmentalism of the year 2010. What in political economy and political science literature has also been dubbed as the unconstrained intergovernmentalism, where the primacy was really of the European Council, the heads of states and government. So the fixing the Eurozone was a chefhake, and moving away from the democratic method that we have based on the community institution. So that was what happened in the years of the global financial crisis in the European version. Then we have the third way of solving the trilemma, which is basically banking on national institutions, primacy, trying to keep democratic legitimacy, but then forsaking deep political and economic integration. And an example of that was the way Europe dealt with a migration crisis in 2015. So one can say the solution of the trilemma de facto was a non-solution because we did not manage to have a proper way of dealing with the migration crisis. So here, so this encapsulates, I think, in a simplified and cutting many corners, obviously in a simplified way, basically the last 30 years. Now, the question is what I put here underneath. What is this, the solution of the trilemma if one looks to the future? So my contention in the book and in other articles is that we have a chance, only a chance, not certainty, that we, in the dealing with the COVID crisis, we can solve the trilemma via solution A. So where we go for deep integration, ensure democratic legitimacy, but then take decisions at the appropriate level, which is for what is needed at the respecting subsidiarity at the European level. Now, I finish with this question mark and with one other triangle, which is what in the book I dubbed the Monet compatibility test, which you find for those who have access to the book on page 416. So basically, all the Monet dictum that Europe will be the response, will be forged in crisis, and it will be the sum of the response to these crises. So this the Monet dictum. Now, I think what I have dubbed the Monet compatibility test is the checking of whether these responses to the crisis ensures coherence, and coherence under three dimensions: economic, so economic adequacy of the response; institutional, so decision taken at the right level of government, so applying the subsidiarity principle; and political, in terms of, let's say, enjoying democratic support, enjoying support by citizens. So from what I have, I describe in the book and the analysis I have there, is that the quintessential intergovernmental response to the financial crisis, so what you have here, B, does not fully satisfy the Monet compatibility test. In terms of economic adequacy, the Eurozone was the only area in the world with a double dip recession. I think we did not have, I think, the fully appropriate response in terms of European level. So a lot was done in terms of national policies, not much done at the European level. apart from a banking union, which continues to remain incomplete at this stage. And finally, we did not have manifestly widespread support of citizens. You remember the acrimonious discussions, let's say, between the Germans and the Greeks, just to simplify. If I jump to today with next generation EU, with the decisions made on the suspension of the constraints of the Stability and Growth Pact to allow national responses, beside what the ECB has done, mainly most importantly with the PEP program, I think we have a chance to meet these criteria. In terms of economic adequacy, I think it was very clear that the response has been much more forceful than in the case of the financial crisis. I think here studies have actually shown that the combined monetary and fiscal response, including the decisions on next generation EU, have prevented what I call in one of the chapters in the book, the great fragmentation, which haunted us, the great financial fragmentation, which haunted us throughout the global financial crisis. I think in terms of the adequate level of response, next generation EU being a European, let's say, fiscal response, I think has been much more appropriate than simply a coordination of national responses. And finally, and I finish with this, in terms of citizen support, I think next generation EU, at least so far, it is supported by European citizens. It is interesting, here I have looked at the Eurobarometer on the support by to next generation EU type of policies by European public opinion and by public opinion in the frugal countries. So the 5 northern countries which we know are the most skeptical, okay, including Austria. I look at Gertrude, and then what we find there, it is true that in this country there is somewhat less enthusiasm for European responses, but the gap, the delta vis-a-vis the rest of the EU is actually pretty small. So the degree of, and in any case, always more than 50% of the population by far. So I think the chance to have democratic support, I think, is there. What we'll have to see, obviously, and it will very much depend on what we do next, how we implement the next generation EU, is whether this would carry in a post-COVID economy. And I leave this with a question mark. Thank you.
Thank you very much, Marco. By the way, in Marco's book, there's a preface by Adam Tooze and also comments by Martin Sandbu, and both of them refer to Monnet, and Marco does also. So this is not a book talk about Jean Monnet's memoir of 1976, though it would be very well read to understand what has been happening up until monetary union. Marco, we didn't want to stereotype. There are frugals in the north of Italy also, aren't there? Lombardy and so forth. If I would take a Eurobarometer of, they might be quite Austrian. So don't stereotype. Gertrude Tumpel-Gugerell, as I said, has been around when the crisis happened, and it happened initially in one of those corners which many people do not care about, and they should not. As soon as they care about it, it's problematic. And this corner was money markets, banks losing trust. And out of that developed lots of policy initiatives. Gertie, may I bring you in here?
Thank you. Yeah, you know, Austrians and Italians have strong connections from their history. So there is a good friendship, I would say. Yeah, I enjoyed very much reading Marco's book. And one of the merits is that he shares with us the evolution in the thinking of the Commission. And referring to his title, I think pilots are trained to land their planes even when the compass doesn't function. And in this situation, they have to rely on the air controllers. And in this situation, it's good to have experienced people around in the planes, but also at the air control station. I would like to group my remarks in 6 points. First of all, has the Commission changed after the crisis? Was Chamonix right? What were the unknowns at the start of the crisis? What has changed since then? And what were the drawbacks of the responses to the crisis? And where do we go from here? The Commission has changed because it is the nature of a crisis that it is unexpected. There are always some actors around who are not so well prepared, and it is difficult, and Marco has mentioned this at the beginning, it is difficult to identify the eye of the storm from the outset. And referring to Chamonix, for whom I have a great admiration, also he was not a Democrat, I think crises are shaping the EU. They make changes possible which otherwise take years or decades to happen. But at the same time, they also divert the energy of the decision makers. And we could see this also in the recent crisis. What was the unknown at the outset of the financial crisis? Just to recall this. I mean, the financial sector was under-regulated and overstretched. Convergence between the Euro member countries were lower than we had expected originally. And the financial sector was fragmented. Marco has mentioned it, and barely capitalized. We had no single supervisor, no single secretary of the Treasury, no safety net, no safe assets at that time. And this is only more than 10 years ago. And if we think back, apart from the European finance minister and maybe a larger pool of safe assets, in the meantime, we can tick many boxes. It's bank regulation, the safety net, the resolution authority, the single supervisor for 115 banks, which regulates 80% of the market participants. We have, let's say, elements of a single asset, and this is maybe the biggest achievement after this crisis, the integrity of the Eurozone has been kept. And all this could not have happened without the Commission. I think in addition, what has happened is that this Commission has broadened its surveillance. It is taking into account more the structural considerations and also social consequences of some measures. In addition, it is complemented with the ESM. Also, it's intergovernmental, but I think there is a very good institutional cooperation as far as I can see it. And the Commission has become more growth-oriented after 2015. And we all know and have experienced how difficult it is to reform countries from the outside and without political ownership in the country. And I think we are not alone in Europe, because the IMF has tried for many years, for instance, to trigger reforms in countries like Argentina or Turkey, and not always with success. What are now, this is the first point, what are now the drawbacks of the reforms or the aftermath of the reform? I think that addressing the crisis had also a price. The no bailout clause in the treaty led to some hesitation in addressing the fiscal issues in 2010 and 2015 on the side of the member countries. And the re-regulation of the banks in 2011 in parallel to fiscal restrictions after 2012 has certainly dampened the recovery, and the fiscal stimulus was maybe withdrawn too early. And therefore, I think at this time, we had not maybe the optimal synchronization of policies. And we must say that the private sector, the banking sector has anticipated the upcoming bank regulation. And therefore, we had this coincidence of bank re-regulation and fiscal restrictions. It is true that during the crisis, intergovernmentalism has become much stronger, and it's very difficult to pull it back. And we have seen how difficult the consequences can be when in 2010 we had a bilateral agreement between two heads of state and government. They suddenly introduced the PSI, the private sector involvement, and it triggered, I think, without broader involvement of the Commission of the Central Bank, it triggered another wave of uncertainty in the markets. Maybe one small criticism of Marco's book, he has left the role of the ECB more or less out. And I think the ECB has contributed in cooperation with the Commission and also the member countries to address the financial crisis, but also the pandemic crisis as well, because we can see very clearly, if you see during the pandemic, the reaction of companies at the beginning was to draw their liquidity lines, but once they saw that there would be ample liquidity and also budget, let's say, budget rules were lifted, I think they became more confident, and the pandemic has not hit the financial sector this time. And I think this was one of the conclusions and lessons from the last crisis. To conclude, to come to my last point, it is sometimes in crisis situations, you feel a kind of institutional loneliness, and therefore I think trust and transparency are key to achieve institutional cooperation and also political coordination. And I think this is very important for the Commission, but as well as for the other players in this game, so to say. And the Commission has always been a very transparent institution, and therefore also, let's say, democratically accountable. For the future, I think Next Generation EU is really a good example for the Monnet principle, because it is a step into the direction of a more joint European perspective. And it's always the role of the Commission to think new and courageous and to trigger the debates, and also sometimes have let's say, a lot of courage and also, let's say, patience to wait for the results to happen. But there are many challenges ahead. I think there is a shifting of the borders between the state and the markets, especially in policy fields like climate policy and health policy. There is divergence of economic developments in countries. There is the need to secure the cooperation, the coherence, and also the consistency of policies. I think it is important to have an agreement on a fiscal framework, on structural policies, industrial policies, competitiveness measures, research. Research is one of the most important elements, and in the end, it's about the well-being of the citizens. But what is important is to address the joint and find joint answers to the global challenges. And I think, as Marco, I am on the confident side that also in the future, Commission will play a constructive role, even if the agenda changes. But I think it is important to have this interplay of the institutions.
Thank you very much, Gertie. That was excellent, though you've been a little bit too friendly. What I, in particular, would, if I just would summarize in 2 or 3 points, you explained the institutional learning process of the Commission, the Commission clearly learned over time and has quite substantially changed its policy making. But also the point you made about institutional solitudinous, which is Tommaso Pagliascopa calling for much more interaction between the policymakers, coordination between the policymakers in order to come to a consistent policy setup. I'd like now to hand over to Jeff. Jeff has been working on lots of issues around who has to charge the burden when it's about rebalancing, when it's about adjusting. Not only in Europe, but in particular in Europe. And in Europe, we have our special way of balance of payment crisis and our special ways to respond to it. I've learned so much on the political economics of this by reading Jeff. Can you give us an indication why Eurobarometer, which Marco was also alluding to, the way you interpret what has been happening with the Eurobarometer over the last 10 years or so?
Okay, well, let me say, this is a fascinating book, essential reading. It was like reliving the last 25 years. And I have about 3 or 4 hours worth of thoughts on it, which I'm going to try to compress at least some of them into 10 minutes. But I'm going to focus, and we'll come back to that if you want, Hans Helmut. But I hope you won't mind, and I hope Marco won't mind, if I go in a somewhat idiosyncratic direction of my own, since I am a scholar, not a policymaker. And I'm sure Hans Helmut anticipated this. And I want to do 2 things. First of all, to talk a little bit about the theoretical and analytical context within which this is taking place, and then also to talk about some of the international implications. Everyone loves a trilemma, although I'm not sure everyone loves a trilemma as much as Marco. I certainly love a trilemma, and I love Dani Rodrik. But I want to suggest that we think about this issue from a sort of supply and demand standpoint, so that we can understand the theoretical background here and what the broader implications are. So situating the issue, what we're really talking about is the political economy of public goods, in this case, global, or in this case, regional public goods, which I think is the central problem of the day, whether at a regional level or at a global level. We talk about governance. Governance really is the provision of government-like functions of public goods, whether those public goods are things like financial stability, macroeconomic stability, the appropriate resolution of a debt crisis, rebalancing, as Hans Helmut says, or climate change, or other regional or global issues. And when we think about this, where does the supply of governance come from, or what is the problem with the supply of governance or of a public good? It's that domestically, if we think about this at the national level, that private interests don't have the incentives to supply that public good, and therefore government steps in to do it. And then at the regional level or the international level, these governance structures, these public goods are undersupplied by national governments. So we need something supranational, an international organization, or international interstate cooperation, or the EU at the regional level of the EU. So that's the supply side, the undersupply, unless there is some more authoritative supply at a higher level. But there's the demand side as well. The reason these things need to be attended to is that there is an implicit demand for them to be supplied. And here I want to especially talk about the reason why we're seeing so much discussion of supranational, that is above the national level, public goods and governance. As societies become more and more economically, politically, and otherwise integrated, the demand for dealing with what Marco would call the spillovers, externalities across borders rises continually. And the example I always use for my students is about finance and financial regulation. As financial markets went from local to national, every government devised a central bank, national financial regulation, things like that. And now we see that as finance has become more global, there are increasing demands for dealing with the issues that arise at a supranational level. There's a demand for regulation, for harmonization of regulations to move up to a supranational level, whether that's global under Basel, things like that, or at the level of the EU. Now, EU may have gotten the sequencing wrong, where they go to the EU level of regulation before you actually have European-wide financial markets, but the broad problem is the same. This is the core problem that the EU faces. It's the difficulties of getting countries to agree on how to coordinate behavior, how the burden of provision or the burden of adjustment will be distributed among countries or among people within countries, how these governance structures should be built and implemented. So that I think, to me at least, it's useful to have that in mind as an understanding of where the supply is likely to come from and where the demand is coming from. But I want to turn now to the political economy of global or regional public goods, because there's sometimes misunderstood in a central way. Domestically, when we talk about government or public goods, the problem is that there's insufficient economic incentive for private agents to provide the public good, insufficient incentives for private agents to provide clean air or public health or infrastructure, things like that. That's not the issue at the global level or at the regional, like EU level. The problem there is not about the economic incentives to private actors, but the political incentives to governments, because the actors here are governments, not private actors in the economy. And so the problem about global or regional public goods is when national governments don't have strong enough political incentives to contribute to solving the problem. And this, in my view, is absolutely central to the European story that Marco tells and has lived over the last 25 years. And he focuses heavily, as have I, on the Eurozone debt crisis. Because in a way, financial stability or the management of a debt crisis these are major issues in the international economy. And since 2008, they've been major issues in the Eurozone and in the European Union more generally. And the backdrop here is, I think we could agree that everyone would benefit from a quick and effective resolution of a debt crisis. So why didn't it happen? And I want to emphasize something that I truly believe, that the management, or frankly, and I hope I'm not offending anyone, including Marco, mismanagement of the Eurozone debt crisis was, in my view, the single biggest failure in the history of the European Union and of European integration. The way it was dealt with prolonged the crisis. It massively increased the suffering and led to essentially a lost decade, all in ways that were, at least from a technical standpoint, I suppose, completely unnecessary because of the failure of member states to agree on how to resolve the crisis. Now, there were measures taken, especially by the ECB, but the fact that the ECB had to take the lead in dealing with something that should have been dealt with by the member states was, I think, an indication of the extraordinary failure of European integration. Why was it a failure? Why did the member states fail in dealing with the single biggest crisis in modern European integration? Domestic politics. The unwillingness of people on the domestic political front, whether that's the mass public or special interest groups, whether it was the banks or the unions or whoever it might be, the unwillingness and inability of national and domestic publics to agree on who was going to bear some portion of that burden of adjustment, whether that burden was in debt restructuring, in austerity measures, in whatever needed to be done, whatever it would take to hold the Eurozone together, but not only hold the Eurozone together, but to arrive at an equitable and effective and rapid resolution of a major debt crisis. It would have been in the interests of everyone in the EU. And the paradox is that a quick, equitable, balanced resolution almost certainly, in my view, would have left everyone better off. And the resistance to that from these national domestic political environments left everyone worse off. So that to me suggests a way of thinking about the problems that the European Union faces going forward. The core question is, how do governments balance the demands of national constituents? And I'm a political scientist and a political economist, and I take seriously the notion that the job of a government is to serve the interests of its constituents. Now, in this context, constituents have two sets of interests. they have, they have many interests, obviously, but they have an interest in the national concerns of those constituencies. And they also have an interest in the broader EU-wide measures, right? But without an explicit willingness of national constituencies to give something in order to get something in the longer term or broader European-wide context, there's not going to be movement forward, right? But I think the implications for the EU are really, really crucial. That is that the domestic political front is where these battles are going to be fought out. Domestic actors have to be convinced that there needs to be some sacrifices made in the interest of the broader movement forward in providing these regional or global public goods. And I want to extrapolate a little bit just to mention something on the international front, which is, I think this is a broader global problem. International financial stability, IP protection, migrants and asylum, climate change, all of these are really about the demand for the possibility of global public goods. And I think that the European, I don't want to downplay the importance of the European Union in its own right, but the European context and the European experience presages problems that have arisen at the international level. As economic and political integration grows, there are more and more of these problems. And as in the EU, this is going to raise continuing domestic political objections and backlash, which we have seen throughout the OECD and even in the developing world. So the European Union faces this contradiction of the need to more effectively provide regional or global public goods, in the European context, regional, but the world faces it as well. We all face it. The future of the EU's attempts to deal with regional problems that require regional solutions, but national sacrifices, are central to how the EU is going to move forward. But really, that points the way towards the whole range of problems that we will face as the world attempts to deal with global problems that require global solutions, but national sacrifices. So I want to highlight how important the domestic front is for any of this going forward. And I'll stop there, and I'm curious to hear what others who know more about this than I have to say about the European context.
Thank you so much, Jeff. You added to this geometric triangle discussion, supply and demand, and you put it into the context, how are public sector goods provided? What is the reason for dealing with, and how does one deal with externalities? How does one account for them? And then you highlighted the mismanagement, as you call it, of the European, we call it actually the Eurozone periphery debt crisis, and how it led to, as you describe, additional suffering, significant amount of higher social cost. And there probably Europe has failed. Most probably Europe has failed. Before we go into a little bit of interaction on the panel, I've forgotten to mention right at the beginning, for those who would come in, they are of course invited to come in the Q&A, and I'll try to throw it into the debate. Marco, may I ask you to come back quickly, concisely?
Okay, thank you very much. Great set of comments. And I'm not going to go through all of them at all because there were too many. But let me say one thing that I think joins up the two comments, and it is the assessment of the nature of the crisis. And if you jump to today from the financial crisis, the different nature of the crisis today compared to the global financial crisis. What happened in during the global financial crisis, translated in European terms, and then the specific euro area crisis with the sovereign debt crisis after 2010. Basically, what ran the day at the time was the interpretation that the crisis was essentially policy induced. I think Gertrude mentioned failure on financial regulation side. Others in the discussion at the time put the emphasis on imbalances and competitiveness imbalances. I still remember, and maybe Gertrude, this was your time, Jean-Claude Trichet coming to the Eurogroup almost every meeting, showing a chart with competitiveness divergences on within the Eurozone. That was the second element. A third one, which was crucially let's say triggered by the Greek situation, was the interpretation as a fiscal crisis. I think of the three, financial regulation and the imbalances, I think they are more correct than looking through fiscal lenses at the financial crisis. That was, but what these explanations have in common is a policy failure. So what happened there was that the policy failure led to looking at the crisis to the moral hazard lenses. So moral hazard. So when you have moral hazard, then you know that you do not supply of the public goods that Jeff talked about in terms of quick resolution, because somehow doing it that too quickly bails out those who are supposed to to have actually caused the crisis in the first place. So what happened there? And we saw it in the debate in the European Council. Ultima ratio dominated the discussions. Ultima ratio, it means that in order to convince your public opinion, you can only come in when you are staring into the abyss. And the decisions were made at the last moment. In the meantime, obviously, you had a lot of damage. Now, this went hand in hand with the crystallization of the divisions between the North and the South in the Eurozone. So the North putting the emphasis on responsibility, risk reduction, the South putting the emphasis on risk sharing and solidarity. So this crystallization here actually led to what John Rawls calls the lack of the veil of ignorance when we did the reform. We knew exactly, taking certain measures and doing certain reforms, who would be the winners and who would be the losers. And we know that when you make a reform, knowing the interests in the first place, those who gains and those who loses, this is not the right approach that you have when you have reforms, when you have to implement reforms. So if you go to today, I think Gertrude mentioned it. I mean, this is an exogenous shock, the COVID crisis. It is not the fault of, immediate fault of anybody. One can then go back to and try to retrace the roots of this, but it's essentially an exogenous shock. And we have seen also since last year and today, it is not clear at all who are the winners, who are the losers, or we are all losers. But if in different degrees, we know that, for instance, Italy, Spain had very strongly hit last year. We see Germany actually now suffering more than Italy. So it is not clear who are the winners and who are the losers. So in a sense, this helps to recreate Rawls' veil of ignorance. So we can make reforms which we cannot anticipate in advance who is going to win and who is going to lose from. So the principle of insurance, the political actuarial principle of supplying certain public goods, I think would be recreated now, and we would have, I think we have a chance in a sense with next generation. You provided that the implementation confirms and comforts that, in a sense, to come to a lowering of the political discount rate, which is key to provide a proper and effective response, as Jeff was calling for, and to internalize the spillovers and to supply more of the public goods that are needed in this juncture. And if you think about vaccinations, I mean, many of these considerations actually apply.
Thank you, Marco. The initiative for Next Generation EU had, of course, a precursor at the national level. There was a suggestion made by the French and the German government, and actually they went way beyond what was ultimately achieved in terms of the parts of grants. So that harks back to Jeff's point. The fight is at the national level, and the fight is also at the national level in terms of the implementation of these programs, which are structural and long-term programs. So how, Jeff, may I ask you, how can one achieve that the national level takes account of spillovers, international reverberations?
Yeah, this is you can ask me. I'm not sure I can answer effectively, but in a way, this is a broad question about how you garner political support for policies that have concentrated short-term costs, but diffuse or longer-term benefits, right? So, you know, how did we, and history gives us some guide. I mean, we have public sanitation, we have public health, we have all sorts of these public goods being provided. And I think what both theory and history suggest is you need to, that you are best guided towards relying on those who have a professional or a concentrated professional or personal interest in looking farther, looking deeper, looking longer term. So you know, I'll give the analogy of public health, right? How did we get a lot of these public health measures, many of which, I mean, I'm talking historically, and global public health is a good example too, because it's the first area that we got global cooperation on. How did we get these things? Well, because the medical community and related communities really mobilized around the need to supply better public health institutions. So I don't know what the analogy is, and I think it would vary by issue area, but you know, in the public health realm, you know, why do we get, I mean, the response to the crisis, to the pandemic has not been perfect by any means, but there has been a lot of both regional and global cooperation, and much of it has come through the dedicated public health institutions and bureaucracies at the national level. You know, keep in mind, of course, that public opinion, I'm not a behavioralist. I don't think public opinion is infinitely malleable, but public opinion can be molded by informed commentary, informed suggestion by experts who can point out, look, if we're the only ones, if we in, you know, let's say Massachusetts or Austria are vaccinated and none of the surrounding countries or states are vaccinated, we're not safe. If our public health, you know, so our public health depends on the public health of people around us. Our environment depends on the environment of people around us. Our financial stability depends on the financial stability of people around us. So I think that one has to both rely on people with a concentrated, targeted, informed view who have an incentive to push for these things, and on something of an informational campaign with the mass public. Both of which I think have been going on in the European context. I think that second point, and I'm very curious to know what Marco thinks about this, which is compensation. Now, compensation I agree completely. The pandemic is very different, and in many ways, it's a tremendous opportunity because it doesn't really have clear winners and losers, and it's sort of something, it's an exogenous shock that affects us all. But a lot of the things that we're facing, both in the European context and in the global context, do have winners and losers. Climate change will have, there'll be plenty of people who are going to have to pay a high price for adaptation to climate change. And so the question is, how do we manage that compensation? The US has been terrible at managing compensation for the effects of everything from technological change to trade and the financial crisis. The Europeans have been a little bit better, I think, but in my view, a large part of the backlash that we've observed is a failure of compensation. And it's not going to go away. I mean, the costs of a lot of the measures we're talking about are extremely high. and they will be born very unequally throughout the population. So yeah, convincing people is one thing, but helping them find a way through the very difficult path that they're going to face over the next 20 years will not just be a matter of what we might call open mouth policy. It's going to require money. It's going to require compensation. It's going to require a retooling of the educational systems. And there has to be the political will at the national level to do that. Or we're going to see, you know, the Sweden Democrats are 18% now. And many of the Swedish parties have adopted Sweden Democrat policies. And that's going to grow. And that's in a context, that's probably much less favorable to the Sweden Democrats than it has been for the past 5 or 10 years. So what happens when things go back to quote unquote normal? If we have that wellspring of hostility still in large parts of the population. I mean, I asked that to Marco because I think that one of the issues that he mentions, but I wish he had talked more about, was compensation in this context, thinking about winners and losers.
Compensation means that you would like to have support for those who are obliged to adjust, who have to bear the burden, in particular with regard, for example, pricing of climate risk, the biggest externality ever, according to Nick Stern. I'd like to add another question to that, which has, or to put it another way, the great Dick Cooper made a beautiful example about how international cooperation in the health domain worked, I guess about 20 years ago. And it took
1989, yeah, 1989.
Mi dispiace. And it took quite a while to get that solidarity at an international level, but it ultimately panned out in the domain of experts. Now, how does that, how can one that make palatable to the audience? Has the Commission to become more political? Do they have to invest more effort in communicating, Marco? So do you have to go on the road and tell people how that works? Don't take too long notes, Marco.
Okay. Yeah. Excellent questions. Let me just go back one moment, Anselmo, to what you indicated on Next Generation EU and the national origin of that. True. I mean, the initial proposal was by France and Germany with a 500 billion.
Was Agnes Benassi-Kéré and Jakob von Weizsäcker.
Yeah, and okay, then you can translate it at the level of officials. Yes. Now, it is when I showed my triangle and I have a single market and economic and monetary union back to the 1980s and 1990s. We had also there Mitterrand, Kohl, Delors. So it is never let's say Commission or EU institutions alone that bring the. So you have, the point is that when you have initiatives or when you have proposals, inspiration at the national level, how do you translate it? Do you translate it into a delivery which has the EU overall chapeau and logic, or whether or you keep it in a purely intergovernmental framework, which is, I think the jury has come out, has been less successful. So for instance, I take just an example, one that I didn't mention before. In the crisis, we put forward what we have called the SURE program. So basically, that was 100 billion envelope, so cheap loans for labor market measures. So to compensate some of the losers Jeff talked about before. We had exactly the same scheme applied to health as a pandemic ESM facility. One was based on community, sure. The other one was intergovernmental ESM. There were cheap loans, exactly the same. No macro conditionality. One for the labor market, one for health. But money is fungible. So it's not that. So basically, exactly the same. Most countries applied and got the loans under SURE. No country got the loan applied for the ESM facility. So this tells you how the element of mutual trust and common endeavor feels when you are within the community method and when you are in a pure intergovernmental method, which has, rightly or wrongly, some element of stigma coming from the past. So this is the just what I wanted to say on the national input. Now, on the question of the compensation, I think what is very clear is that, let's put it like that, the three functions of government of Musgrave are not independent. So you can pursue allocation and you can put the transition on the climate, the climate strategy on, towards zero emission policies. So this is essentially an allocation policy. This is not independent from the redistribution and the stabilization. If you do not take care of stabilization, because you will have an accelerated obsolescence of capital, so you need, in a sense, to shore up the economy and the investment there, and you do not compensate the losers via the redistribution angle, then you do not get the allocation either. I think this is, is very clear. What we have done in Europe on this, being, not so Cartesian, but, in a sense, deriving the implicit preferences a bit exposed, is that on Next Generation EU and the Recovery and Resilience Facility, which is financed, by the EU by going on the market, issuing common debt, at least 37% will have to go for the climate transition of these funds. So in a sense, you provide the money at the EU level for this, and also to take care of those who suffer in the transition.
Marco, I live up to prejudices. I put on my German hat and hand over.
Yeah, no, just I mentioned the just transition fund for the compensating the loser at the national level, and the climate social fund for compensating losers at the individual level. So I think we try to incorporate this element here in the plan.
Gerti had made 6 very interesting points. I would like to pick up one of them, which is basically about architecture, the coordination, cooperation between monetary policy, fiscal policy, and he also highlighted, because you cannot separate that, as Marco rightly said, allocation function, structural issues. What would be your preferred way of divvying up the labor between European institutions, national institutions?
The question to me?
Yep.
Yeah. I mean, the interesting thing about the recovery fund is, for instance, by defining these limits, how much has to go to climate policies and to digitalization, the European rationale overruns the national policy and also, let's say, fights between different ministers about the allocation of funds. And this is an interesting point, that in the end, in this case, European policy setting can overrule national policy setting in a very explicit way. And it was in the end with the agreement also of the governments. But if you have certain targets, obviously it's possible to set it at the EU level and let's say reduce the national, let's say, policy fights. But what I wanted to say about crisis fighting in general, I mean, what we can learn from currency speculation is that the only way to break a wave is to flood the market with liquidity. And this you can do in different policy fields, like in the field of public health, provide vaccination for free. Even that is not sufficient, but it is a step in the direction of lifting the rule, changing the rules. And this is the critical point in fighting a crisis. When do you change the rules and lift the rules and allow exceptions? And I would like to add an example. In '98, we had a terrible situation in the financial markets because after the Russian crisis, stock exchanges dropped around the world. Yeah? It was difficult to stop this. And I remember that the then president of the New York Fed told a global meeting of banking supervisors, continue lending. Yeah? This was a shock to supervisors because as a supervisor, you are trained when the risks go up, you restrict, let's say, the lending. But in such a situation, you have to go counter. Yeah? And this, imagine if we had the same reaction from the Fed New York in the Lehman crisis, maybe the crisis would have looked different.
That's a perfect bridge to a question which comes from Leela Talani. She's addressing it at Jeff, but I hand it around. Why wasn't the ECB right from the beginning an institution which was supposed to have a lender of last resort capacity? Why was the ECB basically by treaty excluded from that capacity? Constructive ambiguity, etc.
Because it was built on the experience of the 1920s and 30s, where printing money was one of the ways to hyperinflation, and in the end also to, let's say, break up of societies and political systems. Yeah?
Mm-hmm. But if you're right, so hasn't our experience since 2008 given rise to question with regard to that view?
I mean, what is difficult to distinguish always is in let's say, in financial crisis, where does liquidity support end and where does capital injection begin? Yeah? Mm-hmm. And the same is true for government financing. Yeah?
If we put on the right-hand side of the equation the balance sheet of central banks, which are now 8 times larger than they used to be in 2008, there seems to be a breakdown of the multiplier, didn't it?
Can I make?
Yeah, it was.
Yeah,
it is actually your question.
Well, 2 points. The first point is there's a difference between acting as a lender of last resort to deal with a financial crisis, that is a bank run or its current equivalent, which is a run on the markets, not on banks. That is something that's seen as a short-term set of measures to try to, in a welfare improving way, stave off via this implicit insurance a bank run. That's one thing. Another thing is a debt crisis, where there's a long-term issue of how do you resolve that, which involves debt restructuring, austerity measures, very much more complicated. And the fact that the ECB was the only game in town was, I think, disastrous in some sense, and not the ECB's fault. The ECB was tasked with dealing with a debt crisis when, even if it had been an explicit lender of last resort, it really is only set up to deal with the financial aspects. So that's the first point I'd make. The second point is on the lender of last resort, as Leila has noted, the Bundesbank was a lender of last resort. I think the real issue here was not whether lender of last resort was a good function. When you act as a lender of last resort, as is true in any insurance function, there's the moral hazard issue that Marco raises. So you have to then have the ability to act as a regulator and supervisor to ensure that your money is not being wasted. So the problem with setting the ECB up as a lender of last resort in 1999, I guess, or 1998, was that there was no structure to ensure that insurance function would not be abused by the member states of the Eurozone. And what's now developed is something along those lines. I think the common supervision is to try to address that.
Can I come in? Okay, sorry, Gertrude. Please go ahead.
Remember, the lender of last resort function, when it was defined by Beirut in the 19th century, was always a function to stabilize the banking market. It was never a function to stabilize government financing. Yeah? So okay, it's a misuse of the term also, I think. Yeah?
Leila, by the way, is also right. What concerns Bundesbank, it is even more interesting to know, many didn't know. The Bundesbank has also always been involved in supervisory activities. It was the operational arm of supervision. So it had the knowledge within the institution about how, as Jeff asked, how insurance function could be delivered. So there was some sort of misconception.
And
We are firing up right at the end of the debate.
Okay, can I come in
Yes,
on this issue here also? I mean, one specific and another more general comment on this lender of last resort issue. I mean, the OMT, so outright monetary transactions, actually try to solve what is the key problem when you have to assess whether to support financial system, banking system, or a country or not, which is there an issue of solvency or is there an issue of liquidity? So that is and the OMT actually allows to support to the extent that the country actually takes a program with the ESM, so that in a sense they could then be comforted in supporting the country because the solvency issue is actually solved by the program itself. So that was how the thing was constructed. But I have a more general consideration, which I think is relevant and goes back also to what I think both Gertrude, but especially Jeff, said before. I think my experience and looking at the functioning of the Eurozone over so many years is that you need a certain amount of risk sharing in the system. You can supply that either in an open way via public risk sharing, so it's a fiscal measure, or you can do it via the balance sheet of the ECB in a less overt way. I think during the financial crisis, when the burden was essentially put on the shoulders of the ECB, I think politically, in some domestic opinions, it was considered to be that to do that via the balance sheet of the ECB in an objectively less transparent way was politically less costly than doing it overtly via the fiscal and via the budget. I think that was the crux of the matter at the time. Now, the limit of that type of choice, I think, has been shown also in certain public opinions, in Germany in particular, where I think in a sense, the ECB pushed at the limit, I'm not saying beyond, but at the limit of its mandate, actually then, triggers the backlash domestically, which has been then shown by people going to the Constitutional Court with various types of appeals. I think we are now in a situation in which I think the response to the COVID crisis in terms of a more congruent and balanced policy mix has shown, I think, a coming to age, in a sense, of economic and monetary union, with the burden of the response, I think, being better shared between the fiscal and the monetary, and on the fiscal side, between the national and the EU level.
Marco, that was a beautiful concluding remark, because it basically joins what we all said, that and in particular, Jeff highlighted it, there was a fiscal crisis which was tried to solve monetarily. And this is in fact undermining, of course, the autonomy of the central bank, pushing all of this on the central bank balance sheets and ultimately complaining about it by going to the Constitutional Court. So that was somehow, in the old Greek way, rather ironic. So it was a great discussion. I'd like to see you next time around here in person, Marco. Gertie and Jeff also, because I have a complete list of open issues here, beginning with, by the way, this seems to be a book talk today, beginning, by the way, with Lombard Street, Bagehot, the 3 criteria, which were solvent versus illiquid at a penalty rate against good collateral. So that's what we will discuss next time here. Thank you so much. It was great to have you, and hope to see you soon in person, which I do with Jeff in a minute.
Okay.